Hello, I'm David Scranton, and thank you for clicking this video. I'm here with Jeff Small, president of Arbor Financial Services. As usual, Jeff, it's always great to talk with you.
Great to see you, Dave. Glad to be here.
And today's special guest, Harry Dent. Harry's the editor of Economy and Markets, which is a newsletter, and it's available for free at harrydent.com. Harry, great to have you with us again, as usual.
Yeah, nice to be back, David.
Harry, just to keep continuing our conversation's ongoing saga, the markets, it's a spooky time calendar-wise, but the markets certainly are not acting spooky. With earnings up over 27% year over year and projected 2022 stock earnings to be 9.3% over this year, give us your best bull or bear thesis going forward. Tell us what you think.
Well, you know, you talk about spooky markets. The spookiest markets are ones that go up super fast, vertical. So we had that 95 to 2000 for 5 years on almost vertical movement with almost no corrections. And we had it in 87 for 3 years, you know, from 84 to 87, straight up. And those things are always followed by big crashes because markets just cannot sustain bull moves like that. And even if there's some good things happening, good things don't sustain for that long either. So my problem with this, it's already pretty clear from every forecast I looked at. Yeah, we had a big rebound because of massive, trillions of dollars of stimulus, the greatest 1.5-year surge in stimulus ever, counting fiscal and monetary, way bigger than anything before. And now, just a year and a half into the recovery, the economy's rolling over. GDP forecasts keep getting revised down. The Federal Reserve, the Atlanta Federal Reserve just put out their forecast that GDP is quickly moving down to 1.2%. So if you stimulate this much and you only get a short move and the economy starts to weaken again, it shows that the economy's weak underneath. So the worst thing can happen to be stocks bubbling up like there's no tomorrow because they've been doing it so long, and the economy being very clear that this means you're going to have a straight down market in the next year. So my forecast for 2022, straight down, maybe the biggest 1-year crash we've seen in our lifetime, more than 87, more than 2000, the first of that last big tech crash.
Harry, listen, we know the Fed has overstimulated the markets. The economy, $7 trillion of stimulus from last year is craziness. They're left with really bad choices going forward as the new addiction is stimulus for the economy to grow. But hypothetically, let's have some fun. Harry, if you were Jerome Powell, what would you do right now at the Fed?
Well, see, here's the problem. They're already trapped. When you stimulate an economy this long, you're getting an economy that should have shaken out, worked off a lot of there's 22% zombie companies, technically bankrupt, but they don't have to default when there's easy money and low interest rates and no recession. And debt levels that are now a lot higher than they were already at the highest in history back at the 2007 top when that recession came in. When you just keep stimulating, then it takes exponentially more stimulus to keep a dead economy going. So if they just flatten here, whatever they do here, just taper, this thing is not going to be able to support itself. And the stocks are going to start going down, the economy start weakening, and they'll have to goose it up again. The problem is they've dug their own grave here. I think this thing is going to crash either after one more run into year end or in the first quarter, or it may just keep crashing here. But once it gets momentum, they're not going to be able to control it. And the way it happens, real simple, that first crash, 40 to 50%, you get a rebound when they do finally have a chance to react and do something stimulative again, but with a lot less credibility time. And then you get a 2-year plus grind down in stocks. Every major bubble burst has had that first dramatic crash, sharp rebound, and then a grinding downturn when people realize no.
So Harry, I'll take that answer as nobody wants to be Jerome Powell right now. Nobody wants that job because
if I was him, I'd fake a heart attack and go disappear somewhere.
Okay. Well, I'm sorry I asked you what you would do then. Okay.
Harry, Jeff, thank you both for being back with us.